Silver and gold, silver and gold. Everyone wishes for silver and gold. That's a classic Burl Ives song. And if you're a precious metals bug like me, you're always wishing for more physical to put in the stack. So anyway, let's get off my singing and focus on the charts. Obviously, both of the metals had a big drop in the last couple of days. It's world events. I guess easily point at two. We've got a resumption of the kinetic activity in the Middle East. That's one factor, significant factor. Stock markets are dropping. Interest rates are rising. There's a lot of cost of oil, cost of gas, any number of things going on economically. I don't believe that this correction, this drop in prices of the precious metals over the last couple of days, I don't think it has anything to do with the precious metals, other than the fact that they are a physical asset that is very liquid. And so when you're losing your ass on all of your other positions, what do? Well, you sell your most liquid and profitable position to cover your losses. And so I suspect that most of what we're seeing in the precious metals is they're selling to cover their losses in other areas. And of course, then the momentum traders and institutional traders, they pile on and give the downward movement extra velocity. Both metals lost the 200-day moving average. And so, it looked like silver was going to hang there for a minute. It didn't. Yesterday, it looked like silver was going to find support here around 64-ish. It did temporarily, but then, obviously pushed lower. We got a little bit of a bounce today, trying to bounce. Personally, I don't think that this downward movement is over yet. Unfortunately, the next target that I see in silver is, it's 55-ish. And we'll look at several silver charts that will show you why I think that that's target. Gold, again, 3,900, and we'll see what it does. Hopefully it finds support down there somewhere. And, MACD, it's just both metals. Bear mode on a sell signal, steeply headed headed lower. We can do the same thing in silver here based on this prior low. We still got a ways to go. And of course that could happen, today, tomorrow. Energy very low based on stochastics. Let's move on. We had a tentative uptrend, and I've shown this in previous videos. So if we start here, this is silver in the daily time frame. So we get a low, and then a higher high, higher low, higher high, and then if the uptrend is to continue, we're looking for a higher low, another higher low, which could have been right there, and then off to the races going higher. Well, clearly that didn't happen. Instead, we got a failure of the tentative uptrend, and that failure occurs when price took out this the higher low. And so the tentative uptrend has failed. If we go back to, this is where we're tracking the downtrend, the technical downtrend, a series high, low, lower, low, lower high, lower low, etc. And what this chart shows is I was focused on, or I was identifying this movement, this small movement here within the green channel as the next lower high in the downtrend. And in hindsight, I don't believe that's the case. I think that what we really got is this is our lower high. This was just an intermediate move within this larger downtrend. And so now we continue lower low, lower high, and currently, right now, it's looking like a double bottom. You know, if we had to identify what's going on at this particular moment, where'd it go? There it is. We got kind of a double bottom going on with this previous low. And so we'll see. Double bottom would be positive. But of course, the potential is that we get another moving down to a lower low. That's what I'm showing in the yellow highlight. Again, 56, 57, somewhere down in here. This chart's a little bit busy. Apologize for that. I drew these green price channels tentatively at first, but price seems to be reacting at the channel boundaries. And so, although it was tentative at first, I'm feeling pretty good about these green channels. These pink solid lines, what I'm showing here, one of the techniques that Dr. Timothy Morge taught is he called the technique double the range. And it was within one of his toolkits he called it crayon drawing. You know, because basically you're taking out the crayons and you just mark it on charts to see what you find. And so double the range, it turns out that when you pay attention to it, quite often when price breaks out or fails from one range, what it does next is it goes and duplicates that same price range in the next direction. And so that's what I'm showing here, doubling the range a third time, or actually this was the first double, this would be the second double, gives us that target 57-ish. Keep moving here, three fans. What I like about the three fans technique, and well, it kept us out of becoming overly excited or overly committed financially to what we perceived or hoped was a new uptrend in the precious metals. Going by the three fans technique, silver never broke above the third fan, which would indicate that it was in a new upward rally, you know, a new bull rally. And that didn't happen. And so I haven't redeployed into mining stocks, and I haven't suggested that anybody else do so. And clearly what we can see now is that price has dropped significantly lower. I was hoping that we might, you know, being an optimist, hoping that we might see some kind of, you know, more sideways and then a break through the third fan. Clearly that hasn't happened. So, and yeah, that's we had a convergence of support around 72. It failed. Support at the 200-day moving average failed. And so anyway, the key point on this three fans technique is that it made it clear that silver was not back into bull mode yet. This is a logarithmic mode price chart. I just want to make that clear. And also what I want to make clear here, folks, is that in my opinion, the only place to be invested right now, the only place to be invested right now is precious metals, and it's physical precious metals. I mean, you know, the mining stocks are fun. They typically multiply movements in the physical metals by 2, 3, 10 times. I mean, you know, that's why people trade the mining stocks. But with the, you know, your money that you're planning to buy groceries with or leave for your grandkids or, you know, whatever you're planning to do with your money, holy cow, put that stuff into physical and bury it somewhere, you know. And so anyway, enough rambling. One of the consistent things, behaviors that occurs in the financial markets is that price will break out of a trading range, a resistance level, and then it will do it'll do whatever it's going to do. But then before it moves significantly higher, it comes back and it tests the breakout level. And so that's what I'm showing in this chart. Oh, and the blue, this is a cup and handle pattern. It's 45 years long. It's a huge cup and handle pattern that gives us a target up here at $400 or better. So it's I don't want to lose sight of the fact that silver and gold, both of the metals, are heading far, far higher, folks. But not right now. Not right now. It won't surprise me to see silver come back here and test this breakout zone, 54, 48, somewhere around in there. Basically a retest of 50, whatever that looks like. We got a couple of headwinds. I'll go quickly. I should wrap up in the next couple of minutes. A couple of headwinds acting against the precious metals right now. This is yield, the interest rate on the 10-year, which is widely watched. If anybody's watching what are interest rates doing, it's likely that they're looking at the 10-year. It's broken above this 4.5% level, did so impulsively, and now just doing a sideways consolidation, waiting to see what's it going to do next. Bull mode on MACD, elevated energy. So, if it wanted to move higher from here, it certainly could. It's got the energy to do so, and it's sure looks like an uptrend to me. And I noticed as I was looking at the interest rates, across the spread of duration, one of the things that was going on in the financial markets, remember that Trump, 8-9 months ago, he specifically told Scott Bessent, Treasury Secretary, to get involved in the bond markets. And of course, get involved, quote unquote, means you need to start suppressing interest rates. And so Bessent, he's a good little trooper, and so he actively set out to suppress interest rates, focused on the short end of the curve, the 1 year, 2 year, etc., and was having pretty good luck. Had pushed the 2 year from 5 down to 3.5, 3.3, and then events took over. And in the background, remember that as a country, America, it's at least 8 trillion, and I think it's closer to 12 trillion in treasury debt that matures basically now over the next 12 months or so. Got to do something with that debt. Typically, what we'd roll it over, we'd basically refinance it. And the plan was to refinance it down here at 3.3. Well, we ain't got 3.3 anymore. High. And then another factor, headwind against the US dollar, headwind against the precious metals, is strength in the US dollar. And I think that there are at least 2 factors going on contributing to strength in the dollar right now. And this is just Brian stating his opinion. Potentially, we have capital fleeing both Europe and the euro. And if you listen to the rhetoric coming from European leaders right now, they seem to be intent on, basically doing away with themselves by 2030. But, whatever floats their boat, I guess. And then the yen, the Japanese yen, is weak because the Central Bank of Japan is still suppressing interest rates. They think that which they've been doing for, I think, 30 years now, so no surprise there. But because interest rates in Japan are lower than interest rates in America right now, it makes sense that capital would seek out the higher yield. So anyway, a couple of reasons that the U.S. dollar could be strong relative to other currencies. And remember, when we look at this dollar index, we're looking at a basket of currencies in which the euro and the yen dominate. And so if those two currencies are weak, we're going to see strength in this index. So that's enough of me babbling about the charts. Sigh, folks. Interesting activity going on in the Middle East. Not much I can say there. Well, there is a lot I could say there, but I'm not going to. I'm going to cut it off here. I'll talk to you soon, folks.